that the World Bank has been doing. And we are very pleased to co-host this event in partnership with the World Bank's Development Research Group and the particularly World Bank Group's the year-long Gender Equality and Development plus 10 Accelerate Equality Initiative. I mean, the title of today's webinar is Expanding Women's Financial Inclusion. And particularly, we're going to be listening to and drawing insights from the Global Findex Gender Note 2021. That is actually, this is kind of launch of that. So before I start, I would like to, thank a few people right at the beginning. I mean, Dr. Leora Klapper and a team at the World Bank, and Dr. Seth Gars of the Bill and Melinda Gates Foundation, and of course each of our esteemed speakers and panelists who are going to be speaking today. But we're going to be starting off with a note of introduction from Mary Ellen Iskenderian, CEO of Women's World Banking. We start off with that, and then we're going to have the keynote presentation from Leora on the Findex Gender Note, and following that, we're going to have a set of presentations from a research program that BIGD is managing. It's a very exciting research program and very related to the overall theme of this webinar today. And that research is on women's economic empowerment and digital finance. And we're going to be listening to 5 very rapid fire, presentations, about 5 minutes each. So 5 presentations from 5 really exciting research projects. And then we'll get to some conversation and discussion from a panel. And then hopefully we will have some time to entertain some questions. But what I would also request everyone is, as you have your questions, please type them on your chat and Q&A. And those who are, presenting and panelists, please look at those. And if you can, try and answer them as you sort of go along, so that, towards the end, we have some questions that we can actually take, which would require a kind of a more verbal response. Great. So I think we should just start. Let me welcome Mary Ellen to provide her introductory remarks. Mary, over to you.
Imran, thanks so much for that introduction. It's really a pleasure to participate in this important webinar, although very, very early here on the East Coast of the United States. Many of you may know the organization I lead, but for those of you who don't, Women's World Banking has for more than 40 years provided low-income women in the developing world with the financial tools that they need to participate equally in their societies and economies. I was really honored when Leora, who is a great friend of our organization, asked me to make opening remarks at this event, particularly since it coincides with the launch of the Findex Gender Note. I'm sure, like many of you earlier this year, everyone at Women's World Banking was eagerly awaiting the Findex 2021 findings, especially as they, like so much else, had been delayed by the pandemic. And I suspect, like you, while we were encouraged to see that progress had been made in closing the financial inclusion gender gap, it was clear that there was still quite a bit of work left to do, since there are still 750 million women who remain completely excluded from the formal financial system, and 50% of them live in just 9 countries. But let's stay on the positive side for another moment. Since the last Findex results in 2017, the seemingly unmovable, unbudgeable 9% gender gap has reduced to 6%, which is fantastic. During COVID-19, government-to-person payments were an equal opportunity force for inclusion, with men and women equally likely to open an account to receive a benefit. In India alone, our back-of-the-envelope calculations indicate that during the pandemic, more than 25 million new accounts were opened by women in order to receive digital relief payments. There's also strong evidence that payments drive usage of other services for both men and women. The World Bank's findings suggest that receiving a payment can usher in active use of an account. It can build a digital footprint on which to access credit, and it can provide cross-sell opportunities to acquire insurance alongside these other products. The evidence also points to the possibility for future expansion because 40 million women still receive government-to-person payments in cash. As a result, we've now reached the highest level of women included in the formal financial system ever. But that puts the onus on all of us who are working in financial inclusion to provide relevant products that engage women clients and keep them in the system. So I think it's notable for all of us here to remember that globally, women are 1/3 more likely to have an inactive account than men. And while one gap decreased, unfortunately, another has widened. COVID-driven digital usage, especially for payments, may have accelerated inclusion in the short term, but unequal access to technology opens up longer-term risks of exclusion. We know from the GSMA data that the smartphone ownership gender gap has widened. It's now 18%, up from 15% in 2021, translating to 315 million fewer women than men owning a smartphone. These gender challenges underscore the importance of continued research attention to the unique barriers women face, alongside the unique opportunity that reaching women customers offers to financial service providers and to policymakers. We know from data on women customers that they are more likely to prioritize privacy in their financial services. They are more likely to say they need help using financial tools for the first time. They're more susceptible to social, cultural, and relationship challenges that complicate their economic and financial sector engagement. So I'm so pleased to see a focus on many of these issues in today's research presentations, including women's digital financial capability, women's financial security, and intimate partner violence. Continuing to shed light on these topics will contribute to the more responsive financial products for women customers, and ultimately greater inclusion. So I'd like to close by presenting some of our own research as a cautionary tale to underscore that access is not enough and that awareness and trust are critical components of usage. Since very near the start of the conflict in Ukraine earlier this year, Women's World Banking has been working with researchers on the ground on a longitudinal study to document the financial lives of Ukrainian refugees, most of whom are women and their dependents. We've collected survey data at borders, in train stations, and in refugee camps in Romania and Moldova to assess women's financial situations. Now, Ukrainian women are a highly educated, highly included population with access to technology. 81% of them have their own account, and 68% have a debit or credit card. They should have been able to flee their homes with just a debit card and a passport. Instead, their lack of trust in the accessibility of their money in their destination countries led them to withdraw funds in full and travel with large sums of cash, putting their personal safety at risk. While their ATM cards and credit cards would have worked in host countries, their fear of being without their money, perfectly understandable, constrained their choices to cash. And unfortunately, they encountered all of the problems that cash brings with it. Their money was stolen far too frequently by host families. There's evidence of trafficking, and they were often faced with ruinous exchange rates for their Ukrainian currency. So even where the conditions for inclusion are seemingly ideal, we must remain attentive to building greater trust, greater awareness, and relevance between financial service providers and the women they are supposed to serve. And our discussion today provides a valuable platform to begin this critical dialogue. Thank you so much for including me.
Thank you. Thank you so much, Mary. I think that was that really sets out the scene extremely well. And I think we're now at, I think it'd be really great to hear from Leora in terms of really doing a bit of a deep dive on the Global Findex Gender Note 2021. So Leora, over to you.
Thank you. Thank you, Mary Ellen, and my sincere thanks to the BRAC Institute of Governance and Development for organizing this webinar and all the fantastic speakers for joining. To focus on the importance of the Findex gender disaggregated data, which has been used by researchers, policymakers, and practitioners to identify gender gaps in access and use of financial services, to design solutions, and to track progress over time. So this morning, we'll be launching on our website our new Findex Note on women and financial inclusion, and I'll be discussing some main themes, but strongly encourage you to dig in yourself to both the analysis and the data. So over a decade ago, with funding from the Bill and Melinda Gates Foundation, we began our partnership with the Gallup World Poll to collect global Findex financial inclusion indicators around the world. Our motivation was that supply-side data provided by banks to regulators on the number of accounts and loans is typically a mystery box of data. And we didn't know how many women had an account as compared to men, or how many women received government transfers into an account or in cash. But now we do, because over the past 10 years, we've asked over 500,000 nationally representative men and women about the use of formal and informal financial services. Excuse me, our headline indicator, included as the UN SDG target 8.1, is personal account ownership, which includes accounts at banks, MFIs, post offices, as well as card-based accounts, mobile money accounts, and accounts used to receive government transfers, wages, and other payments. The data can be summarized by gender, as well as other individual characteristics, such as income, education, rural residence, and more. And financial inclusion matters for development. As we'll hear a little more about, there's growing academic evidence on the importance of account ownership to increase job opportunities and income and reduce poverty, to improve financial resilience to income shocks and climate disasters, and increase transparency of financial transactions, which is important for lending decisions, especially for women who typically have thinner credit histories. There's evidence from around the world showing how digital financial services can offer women in particular greater security, privacy, and control over her money. So that's me in Kenya, piloting the Findex questionnaire. It's important to remember that survey data is only as good as people's understanding of the questions. We've been to over 30 countries where we sat in people's homes asking them the Findex questions open-ended to make sure we were capturing the right information, as well as to understand how and why women in particular make financial decisions. We also take care to sensitively collect the data. So for example, in some countries, we ensure gender matching between the interviewer and respondent so that women are always interviewed by other women. So now let's look at the data. The 2021 database includes 123 countries. Plus, because of earlier COVID-related challenges, we'll be adding data for an additional 17 countries in early 2023. So the good news is that account ownership continues to grow. 76% of adults globally have an account, including 71% of adults in developing countries. This is a more than 30 percentage point increase over the past decade. And on average, we're seeing more equitable access to financial services. The gender gap has narrowed for the first time since we started collecting the data in 2011, 6 percentage points globally. In 2021, 74% of men had an account, as compared to 68% of women. As compared to when we first started collecting the data in 2011, 46% of men had an account, compared to just 37% of women. In some countries like Bangladesh, Turkey, Peru, the gender gap has narrowed as growth in account ownership has disproportionately been larger for women, although large gender gaps remain. In Bangladesh, growth in women's mobile money accounts drove overall growth. South Africa, which had no gender gap in 2017, increased account ownership for both men and women by over 10 percentage points. We also see declines in account ownership, mostly for men in some countries. It's important to remember that demand-side data is a perception of having an account. That means if someone had an account to receive a wage payment and lost their job, they may no longer consider themselves banked, even if the account wasn't formally closed. The income gap in account ownership is also shrinking. Although even after controlling for gender and income, adults with only a primary education are significantly more likely to be unbanked. And this stresses the importance of careful product design, consumer protection, and ongoing financial education and policies and new products design financial inclusion to unbanked women and men. I also want to point out the opportunities of technology-enabled accounts to expand financial inclusion for women, like in sub-Saharan Africa, where mobile money accounts are helping drive financial access, especially for younger women. In the region, we see significant gender gaps for bank accounts and similar traditional accounts, but no gender gaps in mobile money account ownership. And despite the general trend towards the narrowing of gender gaps in developing countries, we also see some countries with persistent gaps, which might be caused by barriers such as lack of national and digital identification or lack of a mobile phone. For example, in Pakistan, 88% of men have a mobile phone as compared to only 42% of women. Recent data Mary Ellen mentioned, collected by the GSM Association, finds that the gender gap in the use of mobile internet has widened in South Asia. Persistent gaps in access to mobile and internet technology could leave women behind in both accessing and using accounts, as well as e-commerce job opportunities. Unbanked women report as reasons for not having an account similar to men: distance from a bank branch, the cost of opening and using financial services, and trust in banks to keep their money safe, and I suspect to not incur unexpected fees. However, unbanked women are significantly more likely than unbanked men to report that the reason they don't have an account is because they use someone else's account. But we know that women without their own account are less likely to use it to receive electronic payments, including remittance payments, or formally save. Women are also more likely to have low financial experience, capability, and confidence, which can hamper women's abilities to participate in the formal financial system. Financially inexperienced users may not be able to benefit from account ownership if they don't understand how to use financial services and avoid consumer protection risks. About 2/3 of unbanked adults, 68% of unbanked women, 58% of unbanked men, said that hypothetically, if they opened an account at a financial institution like a bank, they couldn't use it without help. However, about 1/3 of women who use a mobile money account also say that they can't use it without help from a relative or an agent, perhaps exposing them to greater risk of financial abuse and fraud. This again highlights the importance of a strong and enforced consumer protection framework and ongoing financial education and support. Interestingly, among account owners, we don't find a gender gap in the use of accounts to make or receive a digital payment, on average. However, in addition, we find an important role of payment digitization to expand account ownership and usage around the world. 35% of men, 29% of women open their first account to receive a payment from the government or an employer. As shown here, the dark bar indicates accounts that were opened for the purpose of receiving money from the government or a private sector employee. For example, in Kazakhstan, Malaysia, South Africa, women open their first account to receive, over a quarter of all women open their first account to receive money from the government. As discussed in our new Findex Note on women and financial inclusion, digitizing payments to women is not only driving account ownership, but it's also related to greater use of accounts to pay merchants and utility bills, to send money to relatives, and to save. With the important caveat that adults who receive a government wage, domestic remittance, or other payment into their account are wealthier than the general population, we find that in developing economies, among the 32% of women who receive a payment into their account, mostly accounts at banks and similar financial institutions, 81% report making a digital payment using a card or phone. And over 60% of these women report using their account to store money for cash management and safekeeping, which points to a way governments can take the lead in expanding financial inclusion by digitizing their own payments. Research shows this is quicker, more efficient, reduced leakage and corruption. For the recipients, especially women, receiving a payment into an account instead of in cash might offer greater security over the money received. There are millions of unbanked women around the world who still receive payments in cash. Digitizing some of these payments may help expand financial inclusion for women. For example, in developing countries, 45 million unbanked women receive government wages, transfers, or a pension payment in cash only. There are also opportunities to digitize payments to banked adults to increase their use of accounts. For example, about 72 million women with accounts receive domestic remittance payments in cash only. Efforts to digitize these payments require not only the demand from the consumer for such products, but as we'll hear about soon, appropriate product design, especially for less financially experienced users. So globally, men and women are equally likely to save. Even among account holders, the data finds no gender gap in formal savings. And there's an exciting, although there certainly is regional and country level variation, which I mentioned in the note, but there's an exciting emergence in sub-Saharan Africa of women and men who save using their mobile money accounts. We talked to women in Africa who are using all sorts of formal and semi-formal and sometimes expensive saving mechanisms like susus to save $1 a day outside their home to meet their monthly expenses. Banks aren't necessarily designed for this type of high frequency, low denomination savings, but mobile agents might offer a convenient way to save, and we're seeing huge take-up across the region. A caveat is that many people report saving using both banks and mobile money accounts. Here, the green bar is saving in a bank account only. But looking at the dark blue bar, we're finding that about 15% of all women across sub-Saharan Africa, on average, using a mobile money account to save, including over a quarter of all women in Kenya, Ghana, and Uganda. This suggests that although mobile money accounts might have been designed for P2P payments, there's an appetite for them to deliver a wider range of financial services. And let me just mention that on average, we don't find a significant gender gap in formal borrowing. This is also important because many micro and small businesses depend on personal credit to start and operate their businesses. However, in Latin America, the gap is 12 percentage points. And in many countries, formal borrowing by men and women is very low. So I'd like to conclude with data on why our community's efforts to expand financial inclusion are so important. We asked the question, if your family had an emergency, an illness, a fire, from what source could you come up with the equivalent of about 5% of GDP per capita within 30 days? For example, this is about 350 Indian rupees. And so here's just an example from South Asia, where 40% of men versus only 25% of women say they could come up with the money. This gap is driven by the fact that women are more likely to report depending on social networks, like family and friends, and more likely to say that it would be very difficult, for example, for her sister or mother to actually come up with the money to send her. And we find the high dependency by women on social networks holds across regions. And it's become salient over the past few years that especially during systemic shocks, like the pandemic or a climate disaster, social networks might not be a dependable source of money. And so in addition, the use of savings, as shown on the right, is very low. In comparison to the big orange bars we see for family, which are people who say it would be very difficult to come up with the money, savings is typically a reliable source of emergency money. And so finally, let me end with some new data on financial stress, which research shows is related to physical stress and the confidence to start a business or buy a new home, which can lead to economic growth. With the caveat that this data was collected during the pandemic, the most common financial stress for men and women is typically medical expenses. But in sub-Saharan Africa, 31% of women reported their biggest financial worry is paying their children's school fees, 5 percentage points higher than men. In India, a quarter of women report school fees as their biggest worry, 10 percentage points higher than men. So let me conclude with the hope that by expanding financial inclusion for women, and with the encouragement for women to save and make and receive digital payments to build their own credit history, women can save and borrow to smooth their consumption and spending and improve their family's financial resilience. So thank you.
Thank you. Thank you very much, Leora. I think that was, I think a lot of food for thought. There are questions coming in, so please have a look at some of the questions coming in on the Q&A box, and if you can respond to some of those. But I think this is great, and again, I think provides a lot of food for thought, and sort of hopefully some beginning of some conversation. I'm particularly struck by the importance of an external catalytic role of the G2P payment in terms of sort of triggering financial inclusion, and the importance of mobile financial services, particularly for women. And I think some of the lightning talks that we're going to listen to, I think tries to unpack some of these relationships in a rigorous way. So we have 5 presentations, quick. I mean, these are actually just 5 minutes each. So they're basically just giving us a real teaser, for us to really get to, kind of spark our thinking process really. And we've got 5 presentations, and these are all part of research projects that are supported by the We Define research program that is funded by Bill Melinda Gates Foundation, managed by the IGD. So the first one I would invite Zaki Wahaj, University of Kent, Canterbury, and he's going to be talking on empowering poor urban women in Bangladesh through digital financial services, and looking particularly at asking the question whether wage payment via mobile money translates to economic empowerment. It's very much linked to, I think, what Leora also started laying out in terms of importance of G2P and business to person payment. So Zaki, over to you. Thank you. And 5 minutes, please.
Thank you, Imran. So this is a project which is joint with Mahila Rahanas at University of Kent. And the title is Empowering Poor Urban Women in Bangladesh Through Digital Financial Services. I think the presentations by Mary-Ellen and Leora has already provided sufficient motivation for this work. So in terms of the scope of digital financial services being a source of empowerment for the poor and marginalized in developing countries, and that digital financial transactions has a potential to improve financial autonomy and economic participation of poor women. So this particular project is focused on domestic workers, female domestic workers in Bangladesh, who are in a position of considerable lack of empowerment because they lack formal employment contracts and have limited financial bargaining power within the home. But on the other hand, the majority of them do have access to a mobile phone and therefore can potentially access mobile financial services. So this project is focused on female domestic workers who work for a mobile app company called Hello Task. And specifically, they are matched with their clients via this mobile app. They already receive their wages via a mobile money account. So they're somewhat unusual compared to typical domestic workers in Bangladesh. But what we have discovered through our interaction through this mobile app company is that these female domestic workers make very little use of these mobile money accounts that they have, except to withdraw their wages immediately upon receipt. On the other hand, they are aware of various uses of mobile money accounts, such as sending and receiving money and top-ups, but they're not aware, for example, of other kinds of services which are available through mobile money accounts, such as the fact that they can be used for savings which yield interest. In focus group discussions, they also mentioned that they have limited trust in mobile money agents, and they would like to understand better the various kinds of services which are offered via mobile money accounts. So what we're doing in this project is an intervention in which we provide digital financial training to the domestic workers who are employed by Hello Task. And this digital financial training is based on training materials which were previously developed by Her Finance Training, which has been provided, which has been used to provide digital financial training to women working in the garment sector in Bangladesh. But the domestic workers are a somewhat different group in the sense that they're not as financially literate, and they are arguably are more constrained in their financial autonomy and economic autonomy. And so these training materials have been tailored by Hello Task to their context so that they're more accessible for these women. And this slide lists the various modules that this financial training materials go through. So it provides introduction to mobile financial services, provides introduction to financial planning, preparing budgets and savings, as well as how to have financial discussions with family members. And this diagram shows the research design and our timeline. So this intervention is being conducted through a randomized control trial where we have 3 arms, 2 treatment arms where the digital financial training has been provided to about 170 women each. And in one of the arms, we're also offering to provide wages through a bKash account, which provides a wider range of services and is more readily accessible, at least to some of the women in our study, compared to the existing mobile money account that they have, which is with a different DFS provider. And in the control arm, they don't receive any DFS training, and they continue to receive their wages through their existing mode of payment. So this is the ongoing study. The DFS training is currently ongoing, and the underlying survey will be conducted in October of next year. And the causal mechanisms that we have in mind from this intervention are as follows. So we anticipated that the DFS training can increase use of mobile money accounts beyond cashing out wages, which is typically what these women use them for at the moment, including saving in mobile money accounts, sending and receiving remittances. And we're also anticipating that the training, as well as the increased usage of mobile money accounts, will improve awareness of mobile financial services and trust in these services. We're hypothesizing that this will, that the use of mobile money accounts for savings would increase privacy of information regarding the earnings of these women, because they don't have to cash out. If they're not cashing out everything, they can, they don't have to disclose how much they're earning through this mobile money app. And thereby it can increase control over earnings and bargaining power within the household. And if it increases control over earnings, it can also have an effect on the labor supply. And we also anticipate that increased use of mobile money accounts can improve financial accounting, something which has been highlighted in other studies. And that can also have an effect on consumption expenditure, savings, and investment. So at the moment, we can highlight some findings that we have from our baseline survey. So we find that over 80% of the women in our study have used mobile money accounts at some point in their lives, which is not surprising given that they have at least received some wages in the past through these accounts. And over 95% have access to mobile phones. On the other hand, less than 1% report saving in a mobile money account, although 70% have held savings in some form in the last 12 months. And 42% report saving regularly through a bank or other formal sources. Less than 5% have deposited money in a mobile money account. And about a third have sent remittances via mobile money accounts, and about a fifth have received remittances via mobile money accounts. So we see that there is some previous usage of mobile money accounts by these women. And we also find that some of them have actually opened mobile money accounts with other DFS providers themselves. So they have some experience. And so we think it's going to be interesting to see what effect additional so formal DFS training can have on their behavior, which I think is going to be interesting to have a better understanding of how this kind of training can affect behavior for women who already have mobile money accounts and have used them in the past. So the next steps that we have in this project is to complete this DFS training, which is currently ongoing, opening bKash accounts in the 2 treatments and offer wage payments through bKash in treatment arm 1, and then to complete the end-line survey, which we anticipate is going to happen in October of next year. Okay, so I'm going to stop there. Thank you very much.
Great, thank you. Thank you very much, Zaki. This is going to be a very, I think, useful study. I think it's going to have quite a bit of implications in terms of the whole the whole wage digitalization debate actually goes beyond the whole domestic sector and RMG sector as well. And how can we sort of deepen the financial inclusion and beyond just owning a mobile money account. So really looking forward to the results there. Great. The second presentation I'm going to be, and this is a qualitative work, it's an ethnographic study, and at WeDefine, we are extremely, kind of proud to sort of not only support, really rigorous quantitative economic studies, RCTs, experimental work, but also, we also support really high quality qualitative work because we think that has huge importance in terms of really unpacking some of these causal mechanisms and really then helping us to really then design and ask the right type of hypothesis of mechanisms to sort of perhaps to further study. So I think we really believe in supporting very, very strong kind of focus in terms of qualitative methods as well. So in that spirit, I would like to now invite Caroline Wainana. She's African Population and Health Research Center, and she's going to be talking about DFS, Women's Economic Empowerment, and a very interesting connection with maternal mental well-being. It's an ethnographic study in rural Kenya. Over to you.
All right, thank you, Dr. Imran. My name is Caroline Wainana, and I'm going to be presenting an ethnographic study that we carried out between January and December this year. And we focused on digital financial services, its influence on women empowerment and maternal mental health. And okay. Good. The motivation of the study was basically to explore the role digital financial services played in women empowerment and maternal mental health of pregnant and postpartum women in Kakamega County, in a sub-county called Quisero. Our study design involved 3 phases. We conducted in-depth interviews with women and men and a focus group discussion with both women, men, and community volunteers at the baseline. We had an ethnographic approach using participant observation, where we followed 20 women for 4 months, and finally did an endline interview with women and key informants in the community. And I will share our key findings. One of it was on access to financial resources, and women in the community indicated that they participated in mostly informal jobs and or informal work, which included small-scale businesses or farming, as you can see in that photo, which is represents a farming group. But also to mention that pregnant and postpartum women were limited in their opportunities, and this was because of the late pregnancy phases, or because of a pregnancy complication or childcare responsibilities, as you can see in the quote below from a participant. When we talk about the DFS and the benefits, M-Pesa, which is a mobile platform for sending and receiving, and also accessing loans, was mostly used by the women in the community. And they indicated that it enabled them to share, to send and receive money from their relatives, from their spouses. And that enabled them to be able to, one, participate in decision-making and also have improved bargaining power in the household. And above that, they also mentioned that because of the DFS platforms, especially those ones where they were able to save money, they were able now to have control over their money and what they spent the money on, as again can be seen on the quote that is below. When you talk about the challenges, they mentioned that some of the DFS platforms had high interest rates and short repayments period, which hindered them from using it. And therefore, one of the most used DFS platform was called Fuliza, and it had a longer repayment period because you could only pay when you access another loan. And so they used it mostly than any other DFS platform. Lack or inadequate financial access for women also reduced their usage of the DFS. Women also indicated, but I would say that this was also not a big number. Majority had analog type of phones. The few that didn't have phones indicated they used the spouses or relatives' phones. And the challenge of that was that most of them ended up losing money because money was withdrawn by the people who owned the phones. Others indicated they didn't really know how to use the platforms and therefore had to rely on others to do the transaction for them. And again, that also caused them to lose money in the process. When you talk about maternal mental health, and again, connecting it to DFS, DFS improved relationships, especially marital relationships, because women were able to receive money in real time, especially for spouses who worked outside the study area. And this, of course, as you can see in the quote, it says how when the man came home, he found the food and he was happy about it. And that helped them to, have a better relationship. Women also indicated that being able to access finances enabled them to participate in decision-making, and that improved their confidence and autonomy, and alternatively, it led to better maternal mental health. Access to the loans I've mentioned of Fuliza enabled them to access money that they needed for immediate needs, and therefore they indicated that that had reduced their mental stress. When we talk about now the negatives, DFS increased risks. So this is where we talk about it being acting positively and negatively. Here, it increased the risk of marital conflicts, especially in places where women took loans secretly and didn't reveal that information to the men. And whenever they were unable to pay, the men now would be brought in to pay the money, and that would cause conflicts between them. And also because of reduced spousal support. And this women mentioned it was because now that they were able to access DFS, men reduced the amount that they were spending or they were sending to them. Access to soft loans also increased the risk to debt traps for the women, because women now borrow to sustain themselves, especially before they received money from their spouses. As you can see in the quote below, where a wife indicates how she received money and immediately the money came into her mobile account, it was deducted to pay for Fuliza loan that she had previously. And that meant that she had less money. So she had again to borrow to get enough for her to be able to spend on what she wanted. In conclusion, what we can say is the perinatal period increases women's vulnerability to financial challenges and mental stress, and which, if not handled properly, can actually lead to depression. DFS, as I've mentioned, is a two-edged sword. It can positively affect economic empowerment of women through reducing financial stress and marital conflicts, and therefore improving their well-being. But again, it can negatively affect the empowerment and mental health of these women, the perinatal, we call them perinatal women, through increasing their debt, where they are in the debt traps that I've mentioned, reduced spousal financial support, increased marital conflicts as a result of the income hiding. To finish off, maternal mental stress affects women economic participation and productivity, and therefore it also affects their role in decision-making in the households. Our recommendation then is women need financial literacy and skills, which will give them an informed choice on how to use DFS and therefore avoid negative outcomes related to DFS use. It is important to include men in women empowerment programs, because as you've noticed in one of the slides, I've indicated about cultural barriers keeping women from participating in decision-making, and therefore involving men will help them, will enable them champion for the empowerment of women and therefore eliminate cultural barriers. And to finish off, it's important to involve women in co-creation and co-designing of women empowerment programs, especially for women that we are talking about here, the pregnant and postpartum women, so that then we can improve their access to financial resources, decision-making, and bargaining power in the households and in the community. Thank you.
Thank you. That was a fascinating a set of findings. And I mean, I think, I mean, we're doing a separate qualitative study looking at from BIGD, looking at onboarding of digital financial services, and the framework that we are trying to use is trust, fear, and privacy. And I think it's sort of really interesting, Carol. And I think a lot of the conclusions that you are coming up with, I think, can be, kind of, I think the framing of trust, fear, and privacy could be quite useful in terms of thinking that through. But thank you so much. This is really interesting. Our third presentation, I know we're running a bit behind time, but we'll catch up. Our third presentation is on again another RCT. Is on cash transfers, digital cash transfers, privacy and women's economic empowerment, experimental evidence from Uganda. And it's from Munshi Sulaiman, who is with Save the Children International, and Black Institute of Governance and Development, BIGD. So Munshi, over to you.
Thank you, Imran bhai. I just have one slide, so hopefully that helps with the timing. Right, so just to pick up on the conclusion, sort of not the conclusion, what Imran was talking about, the framework of trust, fear, and privacy. So this study is essentially about privacy, and I've seen a couple of comments about access, and Mary earlier told us that access is not enough. Of course, that's the starting point, but we want to see that access leading to usage, greater control, etc. So the central question for this study is whether privacy is one of the mechanisms through which digital financial services can enhance women's empowerment or not. So of course, the premise there is cash transfer done as cash or through mobile money will have different privacy. And if we can sort of allow greater privacy, or if digital financial services enable greater privacy, maybe then there can be greater control over resources, and there could be sort of a lot of subsequent outcomes. So this study is essentially a cluster RCT. We have 5 groups, including control, but a 2x2 design of treatment arms, where they get either in cash or in mobile money, an amount equivalent to about $60 in Ugandan shilling. And for half of them, we engage their partner when we're giving this transfer, so that they're aware about the transfer, and the other half we don't. So they have the privacy. So the idea would be to see what's the impact of cash transfer on its own versus mobile money, and then when there is privacy, if that adds further impact on any of these outcomes in terms of how they use the cash, their control over the money, employment, decision making, as well as going down to sort of further down the line on intimate partner violence, IPV. We are also sort of experimenting some natural language processing for measurement of IPV outcomes, kind of, but that's not the central question. So yeah, hopefully we'll see the results very soon. The baseline survey intervention has been completed. The follow-up survey, we just finished the data collection. So I don't have any findings to share as such, but from some of the quick process evaluation, kind of qualitative exploration, not necessarily very systematic way, but some work that we have done, sort of couple of things that come out that were not necessarily kind of, I was aware of what I was thinking in terms of what are the margins where women can have this privacy. So once they know that their partner is not aware about the transfer, do they tell them about this transfer at all? So we found that there are sort of variations in both margins, meaning some women just outright didn't tell anything about the transfer to their partners, but there are other women who use this privacy in a way, kind of they say that we received this money, but did not say exactly how much, or sort of said something that they wanted to, so kind of keeping some private information. So it seems like they're utilizing at least from this qualitative exploration, that they're using this privacy of information. But of course, there are also couples where we who say that even with privacy, they know about the transfer exactly how much and when it was done. So in the evaluation, we'd like to see those who could play with this information asymmetry within their couple, between the couple, are able to utilize this for any of these other outcomes, in addition to what others who have sort of shared this, well, who didn't have this option. So yeah, I'll end there. Thank you.
Thank you. Thank you so much, Munshi. And we can, I think quite easily see the connection between, the presentation we heard from Caroline and what Munshi is trying to do. Though the context is, one is a credit context, and here it's a transfer context, but I think there would be, kind of, I think, lessons that we'll get from Munshi's study, which I think would be, kind of very, very useful in terms of understanding some of the hypotheses that that emerged from Caroline's work as well. So I hope you two sort of discuss with each other as well. One of the purpose here is to also create those type of intellectual connections across researchers. Great. Let's move to the fourth presentation, and this is a qualitative study again. And this is interesting because this is actually building on a quantitative, an experimental research that we will be doing, looking at transaction costs. Does transaction costs really matter, in terms of uptake, and ultimately, once uptake happens, what happens to women's economic empowerment? Complement that RCT, there is a qualitative work that we are doing, which is being led by Lupita Huck from BIGD, which is on digital financial services, transaction cost, and women's empowerment. Lupita, over to you.
Hi, everyone. Good morning and good evening. Okay, so our research has not started yet. So I'm talking about research that we will be doing. And it's on digital financial services, transaction costs, and women's empowerment, a qualitative analysis. Now, we have found out that standard financial services has been effective in Bangladesh in promoting enterprises and in promoting women's participation in these enterprises. But little research actually has been done on the digital financial service and women's economic empowerment, although a consumer behavior research on the centrality of gender in mobile financial services did find a positive association between mobile financial services and women's control over finances, spending, and in their role in the household decision making. So what our research will be doing is studying a DFS intervention that is specially designed to reduce different aspects of the transaction costs and aims to promote women's livelihood capabilities and economic empowerment, both through the digitalization of the services as well as through additional design features. So that is that our hypothesis is that a major reason for the lack of access to financial services and on the uptake is transaction costs, which are associated with the standard traditional financial services and that constrain access by poor households and especially women. So an RCT is already being conducted in 2 districts of Bangladesh on this DFS intervention to capture the impact of in 4 intervention arms with 4 different designs of reduction of transaction costs and 1 control arm. And so what we're trying to do through our project is to, a project sort of is based on we're informed by the theory of change that DFS will have a different set of impacts from those associated with the standard financial services. And secondly, that DFS will, the impact of DFS will vary according to its design. So our research question and methodology is, what extent is the promise of the intervention to positively impact women's livelihood and empowerment borne out in practice? And this we will explore through EMIC qualitative assessments of women who are part of this intervention, to dig deeper into the causal mechanisms through which these impacts are materialized. And we will also, we will assess both the impacts that are going to be captured by the RCT, as well as impacts that the women attribute to the intervention, but the RCT does not include within its instrument. In terms of the framework of analysis, we intend to keep conceptual continuity between the RCT and the qualitative study by using the common framework of gender, livelihoods, and capabilities framework. And we also want to keep we'll try to keep empirical continuity by selecting the respondents from the RCT study. And we will be doing the study mainly through qualitative interviews, but utilizing a method called process tracing, which will actually trace the different reasons of change or no changes actually at the critical stages of the implementation of the intervention, the take-up, and the utilization of the services. And the impacts we will be studying in our qualitative study will be in terms of women's practical capabilities, that is in terms of their the productive use of the resources, as well as the strategic capabilities, that is in terms of the resources that women can gather, and the voice and influence within their household and within their community. And we plan to do this qualitative research 2 months after the completion of the online survey of the RCT, so that we can have background data on the household size, on livelihood portfolio, on the impacts, so in order to aid our sampling. And we will be conducting the process tracing with 10 women from each intervention arm, that is 40 women in 4 intervention arms, and 10 women from the control group, so that we can actually look at the specific, the impact of the specific designs. We will select the women in a way that enables us to compare the women on whom the intervention has had strongest impact, and on those on which it has the most weakest impact, and also to compare DFS with other standard financial services. Apart from the process tracing, we'll also be conducting 2 FGDs with men and women, and opportunity mapping exercises in each of these study sites, where we are going to look at the context of the institutional landscape of MFIs and wage employment opportunities, bazaars, but also different gender norms. So that's it for me now. Thank you.
Thank you. Thank you very much, Lupita. I would really look forward to this. I mean, what promises to be a very interesting complementary study, which I hope will not only complement, but also maybe come up with findings that are contradictory and challenging as well. That's how I think knowledge should move forward. Great. Our last but not the least lightning talk is going to be on another very interesting constraint, which is the constraint of female DFS agents or mobile financial agents, and how that constraint, elevation of that constraint, impacts in terms of women's access and women's use of DFS and so on and so forth. So this is engaging women in mobile money markets. I'm going to be inviting Xavier from World Bank to present, please.
Yes, thank you very much for the invitation. Can you guys hear me?
Yes, we can.
Beautiful. Okay, so I'm gonna, given time, let me move. Oops, I'm having issues. Oh, here we go. Okay, so this is a study trying to understand the gap between mobile money usage between males and females. So we know that, given what Leora has presented, there's a gap in mobile money usage, but there's also a gap in mobile money account, although as we've learned, this has been corrected by the increase in account ownership, given the G2P payments, given in the pandemic. But basically, we're trying to understand, why that may be the case. And so in particular in Bangladesh. And so one of the things that we find is that most of the agents are these are business owners, of course, most of the agents are male. And so, and making a digital transaction is quite different from, say, buying oranges or other products, right? I mean, so typically you need to hand over the phone, especially if you don't know what the transaction, if you don't know how to do the transaction. And so, you hand over the phone, there's issues of privacy as was privacy with the agent, not necessarily with your partners. And so women do report, in a very nice study that Leora conducted, women do report that, feeling uncomfortable when dealing with agents, especially if these are male. And again, also we find that women sometimes report, receiving unwanted messages or other advances, by agents, right? And so, and again, so this is, when women typically face male agents. And so we wanted to understand what would happen if we sort of encourage women as agents. And so the first thing that we did is, try to, let's try to convince women entrepreneurs to do that. But unfortunately, there's not a lot of women entrepreneurs actually in Bangladesh. And when they do exist, I mean, the scale of operations is such that they're not very conducive to being agents. And so what we said is, okay, what we can do is basically, how about we incentivize agents to hire an additional employee, and these are going to be focused on the digital transactions. And so what we do is basically precisely that, right? So we're going to have two interventions. So aim at increasing the supply of women. So again, we partner with bKash, which is the largest digital financial service provider in Bangladesh. And so we're going to select existing agents in both rural and urban areas. And the idea is going to be for them to hire this additional employee, okay? And we're going to be subsidizing the wages of this additional employee for 6 months, okay? Again, now, and the nice thing is that we can look at it. So we can look at this intervention from the part of the agent, right? And see how, by having an additional employee and specifically having a female employee, what that does to client growth and usage of mobile money services, both for men and for women. But we can also look at it from the side of the employee, right? So what happens when women are offered the possibility of work, right? Just to review here, we're going to be identifying bKash agents who are considering expanding their businesses. These agents are going to provide a list of 4 potential employees, 2 males and 2 females. And then we're going to randomly assign these agents to 3 groups, right? So a control group that basically does not get the wage subsidies, a male group, a group of agents where they're going to be given the subsidy to hire a male employee, and another group of agents that are going to be given the money to hire, given the subsidies to hire a female employee. Okay. Now we're going to choose among the 2 males or females in the list of candidates. We're going to choose one at random, and the subsidy basically is going to be declining over time. Okay. So clearly, what we can do is then compare businesses that are assigned. So we have data not only from the business, but also from all the nearby agents in these catchment areas. Typically, we have 7 to 10 agents per catchment area, and so we can compare basically their we have access to the admin data at the agent level from bKash, and so we can compare sort of what that does to not only the agent that received the subsidies, but also their nearby agents, right? In terms of business growth, client base, number of transactions, and so on and so forth. And by comparing, remember that there's 2 males and 2 females in the list that the agents provided as potential candidates. So we can, and since one is selected at random, we can always compare what happens to to individual and household outcomes to the individual that was offered the job to the one that was not selected, okay, in terms of income, employment, skills, as well as family outcome members. And so and of course what we also want to do is what happens once the subsidies run out. Are they still do they still continue to work, or are they being laid off? But even if they're being laid off, what does that experience do to future labor prospects? And so with that, sorry I don't have any results to show. The good news is that we're really close to finalizing the MOU with bKash, and we should start giving subsidies in the next month or so. So thank you so much.
Right. Thank you so much, Xavier. We're again really looking forward to this very important study as well. I think all the 5 ongoing studies, I mean, none of these have results to show as yet, but we really wanted to give you a flavor of the kind of work that is happening under We Define projects, but also, the link of the questions that we're trying to unpack in terms of the kind of findings that we're getting from the Gender Note, from the Global Findex Database 2021. I think one can clearly see that the kind of question that we are trying to unpack here through these different studies that we just heard, all will ultimately kind of have a very good connection with the kind of findings and the kind of challenges that are being outlined with respect to increasing women's financial inclusion in a much more meaningful way and in a sustained way. And I think these studies give you a flavor of that, and hopefully you have questions to sort of for the researchers here. Great. We have 2 panelists. We don't have the 3rd panelist, which is good in some ways. It's a shame we can't hear her, but she can't join. But it's from a timing point of view, this is good. So we have two panelists, and these are people who are more coming from the world of not so much from the world of research. They're not from the world of research. They're really coming from the world of broadly practice, business, regulation, and it'd be really good to hear from them their reflections on what they've heard until now, both from the Gender Note, but also from the 5 research that's going on. And please be forthcoming, be critical, and provide your inputs in terms of how research can work harder to really improve things. So I'll start off with Momina Ijazuddin. She's a regional industry head, MCT Financial Sector IFC. Momina, over to you, maybe within 5 minutes if you can. Thank you so much.
Thank you so much, Imran. Good to see you again, and good to see so many old friends and compatriots. Actually, I think we've been, in my previous role, I was leading the work that we were doing globally on microfinance and financial inclusion. So working with Leora as my co-conspirator, and many of the aspects that have been covered today in the reports that people have presented. So essentially, I mean, at the IFC, we've been really partners with the World Bank to try and think through some of these aspects of financial inclusion. Why don't people have access, and particularly women? And so I was really pleased to hear that a lot of what I heard today resonates, right? Like in terms of the research that is being done, but as well as identifying the gaps. So from where we're sitting, I mean, for those of you who don't know, the IFC is one of the largest private sector players in financial inclusion, including reaching women. And we're the private sector arm of the World Bank Group. And, you know, it's interesting because we're co-founders. I mean, we work very closely with Women's World Bank, with the World Bank, and then we're founding shareholders of bKash. So, you know, I'd spent the last decade really studying and going to try and increase private sector investment in inclusion. So working with some of the largest companies and, you know, MasterCard, et cetera. And a lot, I think there's a clear recognition now, unlike a decade ago, that, you know, that one needs to reach women. And women entrepreneurs is an untapped market. Clearly, there's also a need that, you know, like numbers matter. Like even during COVID, there was a recognition that women entrepreneurs are the backbone of developing economies. About 28% of all MSMEs are owned, are women owned. Yet 30% of the total gap in financial services is attributed to women and SMEs. And this number is not small. It's like a 1.5 trillion globally. So, you know, learning from some of the lessons that we've had even in Bangladesh from BRAC, bKash, etc., it's interesting to see that, you know, some of these barriers are very real. That on the demand side, I mean, previous speakers had mentioned on the financial literacy and capability, you know, the requirements for collateral, which is prevalent in many emerging markets, the absence of formal documentation, there are fewer mobile phones. I've recently transitioned into the Middle East and North Africa, where over half of the women in the, you know, in the Middle East and North Africa don't have access to finance. And so the, you know, the gender gap in that region is very big, and sometimes it can be for cultural factors. You know, like in places like Afghanistan, Pakistan, women are not as visible, you know, in public life as others. They're more constricted to the home, less mobile ownership. But even in Bangladesh, where it's really taken off with models like bKash, when we interviewed women, and this is where the research on the mobile money agents is particularly relevant, you know, women didn't want to go into the agents which were in basements, for instance. They didn't want to give their cell phone numbers out, you know, in case that they were messaged. You know, there are like social and cultural norms that one has to take into account when encouraging usage. But even going into the most, you know, advanced of markets like China, you know, even the data algorithms and things that exist, because there's less data available on women, the algorithms are also biased because there's a smaller sample. And even the private sector solutions, which are geared towards scaling up, will inherently reach less women because of the product design. So I think one of the clear lessons for us is that one needs to move away from you know, a space of product-centered design to, you know, like understanding what client needs are, right? Like, and understanding women's clients' needs are much more around networking, the literacy, having much more information about the product, not having to behave like men do. And it was very interesting. I was speaking to a Chinese fintech a year or two ago, which was saying that, you know, like the men tend to apply for loans within, you know, like 5 minutes, whereas a woman will read every aspect, like, you know, print out the document, make sure that it's, you know, and so it's understanding that she will probably go back to the same application 3-4 times, right? It's a more measured approach. So it's understanding some of those needs. Obviously, digitization can help, but, you know, when one looks at what Leora's research is and even like combines that with what the digital divide is, I mean, there are 3.9 billion people who are unbanked in rural areas. They're poorer, less educated, and they tend to be women and girls. The gap is even higher in places like Africa. So part of like our product design or the customer-centric approach with private sector institutions at any rate is to see what, you know, what kind of services do women want? How can one be more gender inclusive in the design? I mean, we've just recently done these like 3 roundtables in Kyrgyzstan, Tajikistan, and Uzbekistan. And it was really interesting, like in terms of the recommendations that were coming out for one really needs to segment the market, like the home-based and enterprises or the women who are at home versus the ones who are like, selling in markets versus the ones who may be running SMEs. Identifying specific needs. So like payments can be a really good entry point into, like getting to use services. But again, one needs to caution against like people using it once. Like in Pakistan, you have like huge numbers of uptake in financial services through like the the income support program, so G2P payments, but women will take that, have it on a card, but will only use it once. So the broader digital ecosystem matters, right? Like the moment that they take the the cash out from the card, then they no longer have use for the card, and so therefore the usage of the card is very limited. So it's when you have development of these systems at play, then it can really make a difference. And then finally, it's to switch to really like what is the value to the client. And for I think for women, it really needs to be very clearly articulated. I mean, we've been doing a lot of work, on that, whether through our investment work, which is, to target FIs to reach this space, whether to have like women designing some of the products or solutions because they understand with more empathy, what some of the needs are, but as well as seeing like, what maybe having smaller loan amounts or, bringing stuff in on the payment side. Finally, just on digitization, I think that has a huge impact from what I'm seeing, like some of these embedded platform models or those who already leverage existing supply chains. And just to give you an example of like what's happening in Turkey during COVID, a lot of the markets were shut. So the women entrepreneurs were obviously shut off from markets. And at a time like this, they were able to sell through Hepsiburada, which was an e-commerce website. And that really propelled Hepsiburada to like literally scale up so much through, MSME finance, on the sales side, that they were able to IPO in New York. So, clearly like a huge sustainable model. And it's interesting because like a company like that, like an e-commerce platform, whether it's Alibaba or Hepsiburada or others, are thinking much more about how do we bring people like this to the platform? How do they transact more? And then how can one offer them the right kind of services? And it doesn't just need to be credit, it's payments, it's insurance, it's health, but digitization may not be the panacea, but it can really help scale up, right? Particularly in culturally relevant markets where women may not want to step out of the house. So I saw this in rural Pakistan, but they're happy to sell like their pickle through Facebook, right, in the villages. So it's using some of these like newer models more creatively, which will really be able to help, I think, scale up in this space. So I'll end there, but it's been fascinating to hear actually some of these. I think we're all coming in at it from different viewpoints, but the convergence around like that there is a need. It can be, resolved through intent and more careful product design. It seems to be like a converging theme. Thank you.
Thank you. Thank you. Thank you. Thank you so much, Momin. I think you really highlighted the importance of use case, the importance of segmentation, understanding segmentation, kind of segmented needs, and be very clear about the use case and the importance of ecosystems. So I think all those are really important things to take into consideration. Let's listen to our second panelist, Sheikh Mohammed Moinul Islam, Chief External and Corporate Affairs Officer of bKash. And I must say that the CEO of bKash, Kamal Quadir, I invited him. He really wanted to join, but unfortunately, in the last moment, I think he had to attend a meeting in person. He had to attend at the central bank, so he could not. But he really wanted to join. So just wanted to extend that. I'm sure he would be interested in learning about what we've been discussing. So over to you, Monil bhai.
Greetings from bKash to all. First of all, I would like to mention a few of the statistics to put things into practical perspective. bKash started this journey back in 2011, and currently bKash has 65 million customers who are adult, and these are unique customers, which would mean that each of the accounts are accounts of individual women or men. But if you look at the ratio that of this 65 million, 57% are male account holders and 43% are female account holders. Now, when we started our journey for opening an account, we used to follow the KYC protocol that demanded one-page paper KYC to be filled in at an agent point. And much of the discussion revolved around the kind of hesitations and a kind of pullback the women suffer from not going to an agent point and not disclosing her mobile number, her identity for social reasons. So obviously the uptick in terms of opening financial account from bKash was far more lesser for the women. Looking at that challenge, we did think about, and of course, with the funding from World Bank and the involvement of Bangladesh Bank, digital KYC was tested. Along with bKash, there were 8 banks. And in 2020, in the month of January, the eKYC project was formalized. And we saw a tremendous uptake of women customers registering, because that was self-registration. They could do the registration right sitting at their home, and some could take assistance of an agent who are known to them. Now, if we look at the transaction volume and count, we'll see that still obviously the transaction count is 69% for the male. And let me mention that in a day, we do conduct a transaction of 12 million counts. That means every single transaction is counted, and 12 million such transactions take place in a day. Of that, 69% is done by male and 31% would be done by female. But when it comes to the volume is slightly more for the female compared to 31% is 35%, and 65% would be male. So women are transacting maybe in a higher kind of volume. Now, we all know that there is a large segment of women work in ready-made garments factories. And there was this requirement of wage distribution digitally. So digital wage distribution solution was introduced, and that solved many of their problems, because previously they used to get the cash, they used to walk into some agent point, get it loaded as e-money, and then send it back home. So that challenge was circumvented by introduction of this digital wage solution. And we see that almost like 42% of female workers receive wage, and they have the control of that fund in terms of sending money home or whatever spending they would like to do for themselves or for their family. Now, we also have a very large segment of diaspora, Bangladeshi diaspora living abroad, especially in Middle East and Southeast Asia, the countries like Malaysia and Singapore, and they send remittance. So we looked at the recipient, and also here the male percentage is higher. 54% male receive remittance from abroad, and 46% of female who receive the remittance from abroad. Then, of course, when it comes to stipend and scholarship for students, there is a large number of students who receive, 4 million students receive stipend from Ministry of Education. Of that, of course, 60% are girls students, 40% are boys students. Now, fund loading was always a challenge. As we mentioned that agents are the one who is to actually do the cash in, which is in terms of mobile fund money, it is deposit. So this sort of fund loading started creating the convenience for women, like getting a wage digitally, receiving remittance from abroad, getting the allowances from government, stipend for their children. So fund loading solution has at least happened to some extent. But again, we are now connected with 37 banks. Bank integration has taken place. So anybody who has a bank account and has fund in that bank account can bring in that particular fund for their use. Now, we are talking about the use cases. Unless there are number of use cases, this particular fund will not be utilized. So we looked at what possibly bKash can serve the customers in terms of the number of products and services. So utility bill payment has really taken off. So the electricity bill, gas bill, water bill, all today can be paid through bKash account. Then, of course, the tuition fees for their children, the school, colleges, and universities now receive the tuition fees. And they can buy their groceries, they can buy medicines from the dispensaries, they can do the ride sharing and make the payment, they can buy tickets for railway, bus, or a steamer, the water vessels, air tickets, and they can reserve hotel rooms or resorts for any woman of any class if they would like to actually use that. But most importantly, because the garment workers are low income group, they cannot go to the big shops. So we have approached the Bangladesh Bank to introduce some kind of merchants who do not have trade license. And we know the practical situation in Bangladesh, the roadside shop don't have trade license. So they introduced personal retail account. So we have had deployed the personal retail account with the QR code, and anyone can walk in a small little shop and buy their necessary goods and other things, groceries, and make payment. So we have created those use cases so that it is not an inactive account. Somebody mentioned that opening an account is not good enough. Financial inclusion would definitely mean that somebody is using that particular account and keeping it active. For future, we thought of certain things that people do want to overcome financial shock. And generally the women, the mother, the sisters, they take the load. So we have had created the deposit scheme. We are now connected with 3 banks and 1 NBFI, so they can make deposits for a term, and once that is matured, they can take the money back in total. And then, of course, for other purposes or meeting very serious immediate financial shock, people need credit. That access to finance we have had created with the Citibank. Now people can take equivalent to $200 for 3 months and then repay and improve their credit rating so that they can demand far more in the future time if they so need. So bKash overall is trying to take care of the customer needs. It's a customer-centric approach that we always take. The cybersecurity and protection of fund is of great value to us, and we try and create convenience for our customers, making sure that our agent network is so spread that anyone would get an agent in a walking distance. Now, with this additional kind of fund loading arrangement, maybe the need of agent will gradually diminish. Someday, people will just get the funding from different sources, maybe from bank, and agent would become quite irrelevant in the next 3 to 5 years. That's all. If I have the questions from anyone, I should be able to answer that. Thank you very much.
Thank you. Thank you. Thank you so much, Munir bhai. I think that was really fascinating to hear what bKash, obviously its story itself is fascinating, but I think what you're planning to do in terms of increasing the use case and particularly working around the ecosystem and trying to develop I think this whole personal retail account is can be a game changer in terms of increasing use case at the micro level. So that would be really looking forward to maybe discussing further to see and sort of, thinking of research in that space as well, evaluating that to see what impact that creates. But thank you so much. Now, there are some questions. I would request for another maybe 7 to 10 minutes extra to sort of just finish off. But there are Q&As. I think if I look at the Q&A, and I would really request Leora to perhaps just sort of kind of comment on this whole thing of if I look at the Q&A, I think the main thing is how. So there are two dimensions in my mind. So how meaningful is this kind of financial reduction in gap that we basically see, primarily given that a lot of it is just driven by this one-time transfers primarily that happened during COVID. How meaningful is it? And how can we perhaps make it really meaningful? So that's sort of my reading of sort of of the question. But Leora, maybe 2-3 minutes for you to perhaps respond to that.
No, thank you, and thank you to all the presenters for this extremely interesting conversation. So we defined an account as one that can be used to store money and to send and receive electronic payments. Although, as people mentioned in the chat, many accounts are only used for transactional purposes. It means a government or an employer deposits money into the account, and the recipient cashes it all out the first day. And to achieve the goal, achieve the benefits of financial inclusion, we need people's user accounts to save money for the future, to then also make electronic payments, to make digital merchant payments, which also allows the merchant to build a credit history, a payment history. And so how do we do that? Certainly, we need to make these accounts more convenient, affordable, and build trust between the consumer and the banks. So, for example, if there's if a bank charges a fee on balances, that would encourage people to withdraw. Someone has to travel long distance to the bank. There's in Eastern Europe, for example, often the employer chose the bank for their employees, and it may not be convenient. If they have to pay a bus fee, they're more likely to cash it out in full. And so designing the accounts, leveraging technology, perhaps agent bank and mobile money agent networks, to make it more convenient and affordable for people to use, to keep money in their account and use it for digital purposes. And also just to mention, there was also some, some chat around this question of accounts being opened only for government payments. What would be the future of these accounts? So there were different reasons why account ownership grew for women. In Latin America, it was very much, it appeared to be because of programs targeting mothers, targeting women, social transfer payments during COVID, which increased women's account ownership. In other places, as was mentioned, for example, we saw in Bangladesh that most of the growth in the country was due to women opening accounts, also likely to receive payments to mothers. But we saw other reasons as well. We saw in many countries in Africa and Latin America, people opening accounts in order. We don't know causality, but we saw hand in hand the growth in account ownership and a huge adoption of digital merchant payments. So, for example, in Latin America, 15% of all adults made their first payment to a merchant or grocer using a phone or card for the first time during the pandemic. Digital payments became a lifeline to small merchants during the period of restricted mobility and when cash was perceived as unsanitary. I think this is a big challenge to the community, is how do we, now that the world's reopened, how do we encourage people to continue to make these digital payments, which is in part, how do we encourage the merchant who is incurring a cost to accept digital payments to continue to do so? And that will only happen when additional complementary products are offered, such as credit to the merchants linked to their payment flows, and when people see the additional safety and convenience of electronic payments.
Great. Thank you so much, Leora. Great. I mean, I really, wouldn't want to, kind of summarize or synthesize. I think this has been really enriching conversation. But just to let you know that there are 2 further events that's basically coming up. And I really hope you all will, find time to join. So one is happening, I think this is happening January 12th at 10 a.m. EST. And this is a IPA and the World Bank with also collaboration from BIGD. We'll be hosting a virtual webinar to introduce the Findex microdata and to motivate and encourage its use in research. And sort of policy circles. So I hope you'll find time to join that. And again, it will feature Dr. Leora Klapper, who will be basically leading that. And this is January 12th, and we will be reaching out to you on that. The second is a BIGD International Conference, which is June 21st and 22nd next year in Dhaka. And this is going to be on making digital finance work for women. So very much, drawing from many of the conversations we've been hearing here today. And I really hope that, we'll obviously, send you more details on both of these events, but I really hope that you will find time to join both of these. And yeah, I mean, I think there are so positive trends, but again, I mean, these are just a necessary condition that we need to really now work on very hard to sort of ensure that they actually are create the meaningful inclusion, financial inclusion that we really want for women, for all the types of impact and benefit that we know it basically generates. So with that, I would like to thank you all. Thank you, Leora. Thank you, Mary Ellen, and all the speakers. Thank you very much, and have a good night or rest of the good morning. Thank you very much. Bye-bye.
Thank you.
Thank you.